Well, hello everybody. Steven Sitkowski here, and welcome to this week's edition of Market Insights. Today is one of those, oh my goodness, kind of days. Um, I left this morning, go do a few runs on our local ski resort, assuming that, democracy would continue on and life would go uninterrupted. And I come back, turn on financial news, and I'm greeted with the demise of NVIDIA. And not quite the demise, but all kinds of negative news and big sell off. And we're going to talk about that and a whole bunch more. More importantly, what do we do at this point for those of you who are invested in tech? But glad to have you with. Want you to know that this conversation is for educational purposes only. It is not intended as investment advice. I can't tell you what to do with your money. We don't have a relationship. I don't know what your risk tolerance is, experience, etc. We can certainly talk about what's going on in the financial market. So, what's moving the markets? AI stocks tank on the news out of China. So, the news out of China is that there's a startup company that for 6 million instead of multi-billions has created an AI chip that could be a legitimate competitor. Now, whether this is true or not, we don't know yet. I think it's too early in the game. We don't know what testing has been done. So I'm kind of taking a wait and see approach. But NVIDIA is down 17% on the day. I mean, that is a huge hit. Do I think they'll stay down? Frankly, I think it is unlikely. Competition does come up from time to time. I don't care who you are. There was a time when we thought Apple was untouchable, Microsoft untouchable, NVIDIA untouchable. And some of them do have a big enough moat that watching their market share erode is not likely. Usually these stocks tend to rebound over time, but it's definitely got all of our attention, especially, as a guy who owns a fair bit of NVIDIA. The next Fed announcement is due out Wednesday. We're expecting no change in interest rates. Really, what we're going to be looking for is the tone of the press conference that will follow the announcement. So that comes out at 2:30 Eastern time. So does the Fed get a little more hawkish, suggest that they may or may not be adjusting interest rates this year? We'll have to see. I know that I'll be watching. Apple overtakes NVIDIA as the world's most valuable company. So, it's a horrible day for NVIDIA. And Tim Cook's like, hey, Jensen Huang, eat my dust, right? As they go zipping by, at least for now. It wasn't long ago that the top spot was held by Microsoft. So, there's some jogging that'll go on. And frankly, it's inconsequential in the greater scheme of things. Now, this is something I focus on regularly. The 10-year is now at 4.526. Wasn't that long ago. It was at 4.81. Of course, it wasn't that long ago when it was at 3.6 either. I'd love to see it dip below 4.5. Maybe we get that depending on how that press conference goes with Jerome Powell, chairman of the Federal Reserve. So that'll be worth watching for sure. Stock market loves low interest rates, thrives on it. And basically, the Fed has been driving this market for the last 2 years. Oil prices creep a little lower to 73.15. A couple of weeks ago, we hit 80. And so there was kind of a breakout Subsequently, there's been a pullback. What to watch this week? Nothing of consequence today with new home sales. Market doesn't care. Um, Consumer confidence supposed coming at 106. Presumably, people are feeling pretty good, and I think they should. Wednesday is the biggie, the FOMC interest rate decision, along with that press conference. That's going to be a big deal and a potential market mover. Thursday, GDP comes out. We're expecting growth of 2.5% and initial jobless claims, 228,000 is forecasted. Friday, another big day with personal income, personal spending, PCE, personal consumption expenditure. So we're looking for the core to be unchanged, 2.8%. If it holds at that level, I will be completely satisfied. Here's last week's heat map, which includes today. That's why you see NVIDIA just brutalized. Tesla's down 10%, Oracle 4%, Broadcom, which moves sort of in harmony with NVIDIA, as I've pointed out on a number of occasions, down almost 15%. But for the last year, and this will give us perspective, NVIDIA's up 91%. So those of us that have held it, yeah, today stings, but we're still way up in that position. And I've been doing covered calls on top of that, creating, an income stream generally to the tune of about 1% a week. Here's Broadcom up 61%, Amazon 48, Tesla 89, Meta 66, Alphabet 28, Lilly 26, Walmart 81, doing covered calls on that. Costco's up 40. So this dip, I think when we look back, will probably represent an opportunity. So depending on what happens tomorrow, I'm likely to short some puts against NVIDIA, harvest some premium, and hopefully acquire more shares at what I consider to be a discount. Market sentiment has gotten much more bullish in the last week. I don't know after today. This comes out every Thursday. So as of last Thursday, market was feeling really frisky. 43.4% thought the market would go higher over the next 6 months compared to 29%, which thought it would go lower. So that was up from 25%. And on the bear side, down from 40%. How much is the Fed going to cut rates? Now it's kind of looking like maybe we get 2 rate cuts this year. Well, it looks like 1, yeah, maybe 2 rate cuts this year. I think that's probably on par with what the average analyst would have to say. And then maybe, 1 at the end of next year, but that's all going to be data dependent. Nobody knows where we're going to be in 2026. 1-year sector return. So the S&P 500 for the last 12 months is up 22.45%. So if you want to know how your portfolio is performing, if it's not up more than 22%, you're lagging the market, which means you should be looking for solutions. The big winners: consumer discretionary, communications, financials, utilities. Now, technology is a push with the averages after today. Same with industrials. And then lagging staples, real estate, materials, energy, and healthcare. Let's take a look at the charts, see what they've got to say. The SPX, this is the S&P 500. You can see it's rolled over, right? It is still hovering above its 50-day moving average. But, overall for the last 6 months, clearly bullish. And we would continue to be bullish in our outlook. Interestingly, the Dow is up today on a day when the NASDAQ is down 3.5% and the S&P is down more than 1.5%. So it tells you that people aren't leaving the market. They're just getting blown out of tech at the moment. Let's see what the Qs look like. This ought to be a doozy. Yeah, it has just dipped below. It's really sitting right on its 50-day moving average. This is down 3% um, on the day. So our track record, here, let me show it to you live on our trade ideas of the week. This was for 2024. Average return per trade, 15.8%. Average days in a trade, 17.3 days. So almost, if I take 15.8, divide it by 17.3, we had an average return of a little better than 0.9% per day. Right? 365 days in a year. It's pretty damn good. And our win percentage, 92.2%. And these were all the trades. That's more than 100 closed trades. So it wasn't like we got, lucky on one or two. So in any event, that's how things are looking. So it's going to be really interesting, moving forward to see what happens with this whole deal. And I think it's just, a bit too early to tell, you know, but I got to tell you, if there's a better run company than NVIDIA, I'm not aware of it. But today, Apple took the lead. All right. Well, I will be back with you next week. Another market update and tales from the ski slope. Hope your days are blessed and safe. We'll talk to you soon. Bye for now.